For what's playing out in the global economy. We have Jerome with the details at this point. And we've been talking about tension, geopolitical tension, intrigues right now. But we're seeing the central bank governor of the biggest economy in the world and the president. They're not in good terms. And
we saw what that did in the markets yesterday, at least for the futures. We saw everything in the red. The U.S. markets early yesterday because of uncertainty. Investors do not like uncertainty, and we don't know where this is leading to. And sometimes we even forget that it's President Trump that appointed Mr. Jerome Powell.
Exactly.
We tend to forget that, but he's the one who appointed him. So perhaps he didn't read his resume well. And he
didn't know how stubborn he would be.
Exactly.
But I guess, this is good, I believe.
Yeah,
seeing that the executive has no influence over the central bank.
Independence of the central bank.
Right.
And the funny thing is, one would have thought that things like this would only happen in emerging economies or developing economies and all of that, not in the #1 economy of the world, where you see a clash of and a question mark on independence of the central bank. The president wants interest rate cuts, and the man at the helm of affairs in the monetary policy says, we don't see the data that's driving that. We have to wait until we see it. And so, the president cannot just tell us, cut interest rates, and then we'll
just go ahead and cut.
Maybe in another country, not in the U.S. I didn't say anything there. Yeah, well, that's what we're starting with. Good morning, everyone. We're starting with Mr. Jerome Powell, where for the very first time, we've seen clashes. And I think this dates back to, remember that video where President Trump went to, there was the reconstruction or construction or enlargement of the Reserve building, and he said there was contradiction in the numbers. Well, that's taken up now, but we see Mr. Jerome Powell responding to President Trump's attacks. And the administration is now worried about its plans to replace the Fed chair. Already we know his tenure ends in a couple of months. That's the Fed chair. And I know Mr. President Trump has already aligned, the individual who will take up that seat. But before he gets out, it seems there's a whole lot of rivers that would have to cross. Let's get the response of Mr. Jerome Powell.
On Friday, the Department of Justice served the Federal Reserve with grand jury subpoenas, threatening a criminal indictment related to my testimony before the Senate Banking Committee last June. That testimony concerned, in part, a multi-year project to renovate historic Federal Reserve office buildings. I have deep respect for the rule of law and for accountability in our democracy. No one, certainly not the chair of the Federal Reserve, is above the law. But this unprecedented action should be seen in the broader context of the administration's threats and ongoing pressure. This new threat is not about my testimony last June or about the renovation of the Federal Reserve buildings. It is not about Congress's oversight role. The Fed, through testimony and other public disclosures, made every effort to keep Congress informed about the renovation project. Those are pretexts. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president.
So there you have it, Mr. Jerome Powell responding to that. So we know, of course, we've heard of the clash before now. But now let's get the perspective or the views of what's going on in the United States from our correspondent, Maria Bird, who's in Washington, very close to where all of this drama. Maria, good morning. I never thought we could see this kind of scenario in the United States of America, perhaps in Nigeria. What's really going on? People say this is about the independence of the Federal Reserve. Mr. Jerome Powell there says it's just because they refuse to cut interest rates as the president had asked for.
Yes, this is a very, as you mentioned, unprecedented for the United States. Can we expect something like this? I think that over the last year, we have seen several indictments for either former political figures, or in this case, we're seeing this against the Federal Reserve and specifically the chair, Jerome Powell. We know the president, since he walked into office almost over a year ago now, he was very clear that he was interested in interest rates being cut. He was very interested in addressing the economic challenges many Americans were facing, and felt that interest rates were a way in which some of that could be addressed. And so the chairman, I think, might he be surprised potentially at the indictment? Yes, but he does know the president's intentions when he did walk into the office. But as you mentioned, one of the very unique things about a democracy, and specifically the United States, is the separation of powers. And the Federal Reserve has always been an independent agency, which has been able to provide the economic outlooks, has been able to provide the economic stability and the forecasting and making those decisions for the country. And that's what the chairman has continued to do. As you mentioned, he has been a chairman for the Federal Reserve through several administrations, including the Biden administration. So the focus is for it to be agnostic to party, but more so for the best interest and for the health of the economics in the United States.
Yeah, so what does this say, Maria, about maybe the successor of Mr. Jerome Powell? But I mean, not forgetting that even Mr. Jerome Powell was appointed by President Trump. But does it kind of set a precedence of fear and authority, of being authoritative? I think that's the word. You know, where we see maybe a successor having to follow the orders of the president, or else you also face this kind of backlash?
I think as you're being very clear to indicate, we know that Chairman Powell's tenure will be up in March. We know that there's a list of candidates who the president is looking to potentially put in place. There was some speculation some months back that whether or not the chairman would make it all the way through March, or if we would see a new chairman placed before that time period. And so we will see someone that will be in alignment with the president's ideals. Now, the question is whether or not Congress will confirm that individual. Due to the way in which the U.S. is structured, it will require that Congress is able to approve the person that the president does choose. Now, noting kind of the balance of power within Congress, knowing the strength of the Republican Party, and specifically the MAGA section of the party, potentially we could see someone that is very much in alignment with the president's beliefs. But I think that we're still a few months away from that. I think that we're in a position right now where we have a chairman that's in place that has received a grand jury subpoena. So watching this unfold, I think, will be very interesting for the American people, one that they've never experienced before. I think Congress is also, this is going to be a very unprecedented experience for them as well. But I think it will have a large impact on what we see when it's time for a new chairman to be placed.
All right, Maria, thank you so much and for joining us this morning. Of course, we trust you to always keep us updated on what's going on there. All right, so let's see other stories from other parts of the world, starting from the United Kingdom, where house prices are set to increase by 1.5% this year, 2026, with Scotland and Northern Ireland showing the strongest growth, while London and Southern England lag behind. That's according to a new report from real estate website Zoopla. Scotland's Motherwell postal area tops Zoopla's ranking of UK property markets with a projected average price rise of 3.4%. In England, Wigan shows that the best prospect with an expected 3% increase, followed by Liverpool 3.5% and Stoke-on-Trent at 2.8%. Outside the United Kingdom, shares of Chinese electric vehicle makers rose sharply today after the European Commission outlined conditions under which Chinese automakers could avoid import tariffs in the bloc. I believe we started this conversation yesterday. Other automakers, including the Leap Motor Technology Co., Geely Automobile Holdings, we know them in Nigeria also, and Cherry Automotors, they rose between 1% and 3%. The European Commission on Monday set out conditions where China-based EV makers could avoid import tariffs by agreeing to sell at minimum prices in the region. And then in Japan, the country may face its own version of U.S. fiscal cliff. In Prime Minister Asanai Takaichi calls an early snap election if she calls for it, a move that could delay parliamentary approval of a bill that grants the government that right to issue deficit-covering bonds. And still in Japan there, the finance minister said that she and the U.S. Treasury Secretary Scott Bessent, they shared concerns over what she has called the yen's recent one-sided depreciation as Tokyo steps up threats of intervention to stem the currency fall. The minister there's comments reflect Japan's rising unease over a slide in their currency, the yen, which crossed the key 158 yen for a dollar mark for the first time in about a year, following report that Japanese Prime Minister may call a February snap election. And in Dutch, inflation there remains unchanged from what they had in 2025, matching previous year's rate. And that's according to data released by the Dutch Statistics CBS. So consumer goods and services prices in the Netherlands increased by an average of 3.3% in 2025, and the same that was recorded. Talking about steady inflation right there from 2024 to 2025 and begin the year 2026.